I was looking over some charts today of a member who says his trades generally lose or they don't go anywhere. There's not a lot of trading opportunities and he's just having a tough time with that. So I asked him to send over a few snapshots of some charts that he was trading. I wanted to take a look at the trades that he was looking at. And he was trading a smaller time frame. It was a 5-minute time frame. And his trades were essentially the same time of day. Now, not everybody has the opportunity to trade around the clock or trade during the peak market hours. And this individual was trading during the quiet off sessions. Now, the time of day when you are trading a small time frame really does matter when you're trading in the Forex markets. Now, I've got an example here. One of the trades he took was in this sideways market here. Now I'm going to put on an indicator called the market sessions indicator. And what this is going to do is shows me what the different market sessions are. So if I zoom out a little bit, the red is Asia, the purple is where London starts and Asia overlaps, and then the blue is London by itself, and then this lighter green is where New York starts and it overlaps London, and then the darker green is the rest of New York. And what's happening here is on this particular pair, this is the Euro USD, we're looking at an area in here where the last bit of New York tapers off, and then there's no real session open. Sydney's open in here a little bit, but we get this area in this zone here, the last bit of New York into Asia. That's a very quiet period of time. That is a time that I will not trade. I will not trade in that off session. What we're seeing is a sideways market and it's very, very slow. Now I'm going to modify this indicator a little bit. I'm going to get the boxes so we can see this a little bit better. Come on. All right, we'll go here to settings and I'm going to turn this into boxes. Okay, now we can see these boxes. We can see the different sessions better. What we're seeing is the last third of New York tends to get very quiet. Once London closes, there's a trail off, and the last third of New York becomes a period of time where only New York is open and there's no one else to trade with. The markets will move back and forth because currency is changing hands. And when all the other sessions are closed, there's nobody to change hands with. So what happens is you get this very slow, very low volatility market, and we can see it trails off into that dead space in between New York and Tokyo or Asia. And then once Tokyo starts, we pick up a little bit of action. Now, it doesn't always start in Tokyo right away. Sometimes it lags a little bit, and then finally we get a little bit of a pickup. But when we get into London and New York, we find that we have the bulk of the market movement. We get some nice tradable moves, some good volatility in those sessions. So we have this period of time that is very difficult to trade. So if I go over a little bit more, we could see how in this case, London was a little bit choppy. New York did take off. And then at the last bit of New York, it trailed off. This became very difficult to trade. If you were going to trade in here, it would be really, really hard. Your chances are you would end up losing your trade. And again, let's move over here. We get this nice market movement. It's a little bit choppier than I like, but we can see that we had some range in here. We had a really nice high, really good low. And then after all of those movements, the market died. And then trying to trade in here afterwards is going to be a very difficult thing. Asia opens, and then we get some more market movement. Things start picking up. So if you're looking at the smaller time frames, you know, the 5-minute, the 2-minute, the 1-minute, the 15-minute, you're going to find this window is going to be very difficult. One more time, we'll take a look at this. The last third of New York, the market tapers off and ends up going sideways. Let's take a look at a different currency pair. Let's do the same thing with this. This is the pound US dollar. I will get the boxes in here. And we can see the same thing. So we've got this nice Tokyo session where the market's moving a little bit. It's moving well enough that we could probably get a couple of trades out of here. But when London opens, we see this huge market movement. We get this big market movement up, big sweep down, big movement back up. When New York opens, big moves. We have these really nice sweeping moves in these different sessions. But then the last third of New York, things get very quiet and they go very, very sideways. Now, there's a lot of different currency pairs that will include the yen and the Australian dollar. Those are going to pick up a little bit in the Tokyo session. The non-Asian and non-Australian New Zealand dollars tend to move fairly slow in some of this Tokyo session. So to start with, no matter what the pair is that you're trading, the last third of New York into that Asian session is going to be really quiet. And if you can, this is a period of time that you should avoid. Wait for the more volatile sessions like Tokyo. Tokyo can move really well sometimes, but it will generally move well enough that you can get small trades out of it. And then when London opens, you're going to get the bulk of the bigger trades. And then when New York opens, you're going to get the second half of those bigger trades. But then when New York comes to an end and you get that last half to last third of New York, things are going to trail off and it's going to become very quiet and very difficult to trade. So if you're finding that you are experiencing some losing trades, take a look and see what is the session that you're trading in, and is there anything you can do to trade maybe a little bit earlier or maybe a little bit later. Get into those volatile markets where there's some volume, where there's some market movement, where the trends start to develop, and you'll find that your trades are going to be much more successful.